Hey traders, Raghee here, and in this video we're going to discuss what to do in case we have a turnaround Tuesday and what it is that I do on a day like today where the market is just skyrocketing higher on the open. So this is going to help on two fronts. I'm also going to cover gold. In fact, let's just cover gold here right now. I am looking to buy gold down in this area. Last week we discussed a potential scenario of a pullback. This pullback far exceeded the single daily price movement range that I was hoping to get, which would have been about a 40-point move. We ended up, as you can see here, with a move that was nearly 120 points. It was 118 points, which is 3 times the daily price movement range that we would typically see on a normal session. So this was anything but normal. I also believe it's exhaustive. 3x moves are typically not sustainable. So when we see a dramatic move like this, tomorrow I'm looking for an inside day or I'm looking for a minor low. And specifically what I'm looking to do is buy GLD calls for January 15 at the money to put myself back in the long position. So this will be the third time that I've taken this sort of round trip in this market while it remains in a range. And so I really want to remind everybody, again, this is reason number 400. We don't buy at the top of a choppy range. How do I know it's chop? Well, we can see where the markets have topped and bottomed out, but it's also really clearly marked by the yellow wave of our trade flag there. Another really promising thing is that the last time we were down in this area, we printed a 0.94 V-score, which is to say we only printed a 0.94 standard deviation in terms of the low, and today we had a 9.1. So I'm feeling pretty darn good about this being a bottoming move where we can get long again. Again, GLD calls. All right, so moving on to what you do when a market opens up is dramatically gapped higher as this one did. Getting the first high probability play on a gap, and this is going to affect traders who like to day trade options and traders who like to look for setups on longer term time frames. This will serve both. Remember that at the precise moment of getting your fill in an options trade, you are going to end up at your order entry and you are looking at current price action. So it's really beneficial for that period of time when you're looking for your entry to behave more as an intraday trader, as a nimble, shorter term time frame student of the game versus someone who's just looking at the much more stoic daily candles. So one thing I'll say is you want to embrace both the long and short term time frame. So for me, before I start looking for long positions, I want to make sure that my 1 minute is acting in a way. Now, I like the 1. You can do the 2, the 5, the 15, just something shorter term. But when you take a look at the way in which we gapped up, now a gap needs 2 confirmations. I need to see the gap above the close and a gap above the regular trading hour high. This was easily a fade, and the fade just kept right on going. I was looking for maybe a shallow 38.2% retracement of the distance, but we just kept right on going. So at no point during the morning session was there a buy. In fact, the probability based on the gap and the probability based on the setup of the first 5 minutes of the day is looking for the short setup. As the short continues to play out with the market barely able to overtake the intraday volume weighted average prices, there's no way that I can say the bottoming process has occurred. So today was definitely not the day that I'm looking for a potential buy. It's just take advantage of the shorts. Now, where am I looking? Well, this is what we're going to discuss in the premium video, and it's very counterintuitive, but what markets allowed us in this gap higher to get corrections of downtrends, and which markets in this gap higher did not participate? And finally, which markets really don't care about the Pfizer move, about XLV, and about the vaccine? What are those sort of environmentally, in other words, they were election agnostic, they're sort of COVID agnostic. They've been able to rally regardless of the COVID numbers, regardless of the vaccine optimism, regardless of the election. What are those sectors? And I think for any of you that have been following my analysis in either room, the futures room or the options room, we go back to, and I'm going to make sure you guys know what those are because it's really important to me that you do. It's SMH, it's XLU, these and certain stocks within some of the sectors have been relative outperformers. And that's what we're going to do a deep dive in the premium video. So please focus on some of these relative outperformers. Don't be tempted to go grab the cruise lines and the airlines and the travel stocks. Wait for those. Today on that gap up is not the day. But if the gap up allowed that market to turn into what I call a double green. Let me give you one good example before I wrap up here. United Health is right on the verge of becoming a double green in the XLV. DHR and TMO have been great, but UNH might join those ranks. Today's the day to tighten up that watch list because there might be a lot more that we can trade as we go through November. Today just got me that much more excited about what we could see going into year's end. All right, hope that helped. Leave a comment or a question if you've got one here, and I'll see you all in the next update.